Sense is run by a bunch of investment bankers, and Morningstar's tools can help make
I'm Jason Stipp with Morningstar. Here at Morningstar, we like to cast a wide net for opportunities in the market. And one of those areas that we like to look is small caps. And in fact, we recently did a study on small caps authored by Paul Larson. He's Morningstar's equity strategist and editor of Morningstars StockInvestor. And he's here to tell me what he found. Thanks for joining me, Paul.
Thanks for having me.
So you recently went looking in the small cap space. What approach did you use to start to winnow down that universe and come up with some ideas?
Well, first, it's worth noting that at Morningstar, we view stocks for what they really are, and that is small ownership stakes in businesses. And then we also value those businesses like we think they should be valued by looking at the future cash flow that these businesses are going to generate. And when the value of that future cash flow is not being appreciated by the market, when the stocks look undervalued, we're going to say buy and put our 5-star rating on it. Likewise, if you have $1 worth of future cash flow and it's trading for $1.25, we're going to say, whoa, it's not a value and stay away. And in looking at the universe of small cap stocks, we have found, despite the market run up, a large number of values in that area.
So basically, we have what we think is a fair value for a stock. You looked at the universe of small cap stocks, compared those fair values to the prices on those stocks, and started to winnow down the list. So then what was your next step when you had that list of stocks that looked to be like bargains in the small cap space? What did you start to dig into next?
Right. Well, first, I winnowed the list down to stocks that only had a market cap of $4 billion or less. And then I rank ordered by the price to fair value ratio and looked only at the cheapest stocks. And then once I had that group, I selected the stocks that had a wide economic moat, or as some other people might call it, sustainable competitive advantages. And I really tried to maybe stay away from the ones that did not have an economic moat. And we did find a number of values within the small cap space of companies that do have an economic moat.
Okay, so this concept of the economic moat, it's basically a competitive advantage, what would set a company apart from its rivals. And with small companies, you know, it seems like they might have fewer opportunities to have competitive advantages. So what sort of things would make up a moat for a small company? What would give a small company an advantage over its rivals?
Well, if they had some sort of patent, or if they had a unique asset, if they're a low-cost provider. For instance, one company that's in the report is Compass Minerals, a salt mining company, and they own the largest salt mine in the world, and it's a unique asset where they have a low-cost resource. And when you have a company that can produce something for a lower cost or sell something at a higher price because they either have a strong brand or a patent or something of that sort, a company can generate excess profits over the long term.
Thanks for joining me, Paul.
Thanks.
From Morningstar, I'm Jason Stipp. Thanks for watching.